What is up, YouTube? Welcome to Major Trades. This is episode 2 of Market Monsters, the series where we dissect some of the greatest stock market winners to uncover the clues they left behind before their massive moves. Today, the stock we'll be analyzing is Rigetti Computing, ticker symbol RGTI, more specifically the run it went on in September of 2025, where it delivered a massive 250% move in just 23 trading days. That means you over tripled your investment in under a month. So the question still stands. What clues did the stock leave behind before the massive run ever happened, and what can we learn from its run? Before we dive into the chart here, I'll go ahead and give you a quick rundown of the company itself. So Rigetti Computing is a quantum computing company focused on developing both quantum hardware as well as software. And they design and build quantum processors while also providing cloud-based access to its technologies for researchers, developers, and even enterprise customers. During and leading up to the run, interest around quantum computing was increasing as it started to be viewed as the next generation of computing, so to speak, which obviously could have huge implications in the market. And so as a result, a lot of these companies within the quantum space started to draw a lot of investor attention, as well as the market in general. So now that we have a basic understanding of what the company does, let's go ahead and jump into the chart here, and I'll give you a rundown of what the stock was telling us before the move ever happened. So I have Rigetti pulled up here on a daily time frame, and I've got it marked up. I love to do that with all my stock charts, and you can kind of go through those if you'd like, but I'll give you the rundown. So this stock was in a hot sector. Like I said, quantum computing was getting really hot, and this stock goes on a massive tear here, and it finally, it hits an all-time high, and sellers step in, and this thing drops off. But what happens is this stock over the next 9 months starts to build out this massive base. And on the right-hand side of this base, you can see that the stock starts to put in higher lows and it starts to contract up on this right-hand side here. And what you get is the stock gets super tight before the breakout, and then you see a volume increase into the breakout as this thing breaks into all-time highs. And I want to go over real quickly why we love the volatility contraction pattern, and it's for a couple reasons. So first is it's essentially what it's telling you, right? So the stock is telling you as volatility is contracting, what that's saying is that supply is no longer coming to market. And so as demand stays consistent or it increases, what's going to happen is the stock price is forced to move higher. And so with these plays, I liken it to you're compressing a spring. So if you have a spring and you slowly start to push down on it, push down on it, it becomes a point where when you let go, that thing is going to shoot out and just go super far. And so that's what happens with these companies is when you get a really tight volatility contraction, once that finally breaks, the price is going to run. And in this case, it goes on a massive run here with 250% in 23 days. And so that's the first thing, is it's telling you that it wants to go on a run. Number two is it allows us to immediately be in the money. So this stock, you can see 1, 2, 3, 4, 5, 6 trading days of, during the breakout and through the breakout, it's green. So there's not one trading day where you're red. And so what that allows us to do is you're essentially able to finance some of your risk. So that stock is immediately in the money. You can trail your stop up. And so now you can remove some of the risk off the table. You could take some profits immediately here, or you can just trail your stop. And so if you do end up getting stopped out, you're in a profit and you've already made some money. So you're no longer risking any of, you're playing on house money essentially. And then finally, the last thing is that it allows us to get a really nice tight stop on this thing. So if you're playing this entry over this pivot high of say around $18, your stop would be around this here, around 15. And so what that allows us to do, we're risking $3, and in this case it ran to 58, so that's $40 from 18. So not great at on-the-spot math, but you're risking 3 to make 40, so that's about a 13 to 1 risk to reward trade. And so what's great about that is, you could take, if for example, we'll use this trade, you could take this trade 13 times, and if you're wrong 12 times, but you're right once, you're break even. You didn't lose any money. So you can probably start to extrapolate and see, if you take this trade 13 times and you're wrong twice, you're wrong all the times, but you're right twice, you're making money. And so that's the biggest thing with these, is the asymmetric risk that these allow you to get, is because you're able to have such a tight stop and then the stock runs immediately. So you're able to finance some of that risk and get that asymmetric risk to reward, which helps us become more profitable as a trader. So aside from that, like I said, the stock is running an all-time high. It starts to build this long base. You have a volatility contraction on the right-hand side. You finally get that breakthrough, and on the breakthrough, you're trading on high volume. So this one traded about 3 times the daily volume on that day. And then as well, on the breakout day, the stock was up roughly 20%, and the stock's average true range, I believe, is around 8%. And so it's clearly saying, okay, we're ready to move higher. We're finally breaking through those highs, and we're gonna continue to move. And so you're able to catch that run. It's clear. The stock does not look back. As you can see, like I said, those first 6 days are green, and then here, you have a red day, but it's nowhere near any kind of pullback where you should be worried about selling. So you're able to make your money quick, like I said, and then you can roll your money into the next trade, which is extremely important because we want to be compounding our money as fast as possible. Aside from that, the earnings weren't great, but this one was in a hot sector, like I said, so that's something to keep in mind. A lot of times we do like to see good earnings, but sometimes the sector the hotness of the sector can kind of make up for that. So I'm going to kind of go in here. So this trade itself, we're actually kind of watching because it started to shape back up again. So quantum computing has started to become a hot sector again. So for a while there, it was the AI trade, and that sector is still hot with stocks like SanDisk, NVIDIA, all that good stuff. But RGTI, as well as some of the other quantum stocks such as QBTS, QUBT, IonQ, are starting to shape back up. Even IBM is starting to move. And so what you have here is, again, a stock that's built a base. You're breaking through those highs on high volume. Attention is coming back to the sector, and this thing's starting to tighten up. So this one is probably, I would say, a B- trade, and the only reason for that is due to the fact that you now have overhead supply. So this stock has been higher than this before. And so as we break through this $30 level, you are going to have some selling pressure. You're going to have some supply coming to market here from others who have purchased the stock previously at these levels that's trying to get out at break even. So that's one of the reasons why we like those all-time high trades, is because you no longer have that supply that's going to come to market because you don't have those people who have purchased the stock higher than you. But this one, we're going to continue to watch and see if it shapes up. Whoops. If this thing can get tied up against that $30 level, or in this case $28.50, and we can see a continuation play into those highs, we will take that thing long and put our stop right below that previous day's close, and we'll go ahead and trail that stop. But that's kind of the biggest thing is you need to, I always say, strike when the iron is hot. So quantum is starting to heat back up again, so you need to be able to identify that and then find the stocks that are leading. RGTI happens to be one of them. I believe QBTS was the other one that we were watching here, so I'll pull that one up. Yeah, so this one's kind of the same thing. You had a breakout run previously, and this thing's starting to tighten up against a level here, so we'll continue to watch that one. What was the other one? QUBT, I think, was another one. Whoops. So this one, not as great of a setup, but as you can see, there's starting to get some interest in the stock. And IonQ was another one. Yeah, this one's running as well, but not really a trade that you could take on that one at this current moment. But that is all for episode 2 of Market Monsters. If you enjoyed this video, you'll like the other stocks we've covered in this series, which should pop up on your screen now. As always, if you've enjoyed today's video, please leave a like, comment, and subscribe if you haven't already. Thank you for watching. Major Trades signing off. Until next time, peace.